Welcome. If you are a returning viewer and you watch me regularly, thank you and welcome back. I have been doing a lot of videos showing numbers at 50 and 75%. And I get a lot of people who are saying, how are you getting 50%? How are you getting 75%? Those aren't real returns. You can't get that investing in real estate. You absolutely can, and I do all day long. I don't look at investments that are going to be less than 50%. I'm just not interested. That's because I have investments that pay easily over 50%, even easily over 75%. And I'm going to go over some of those actual properties that I reviewed this morning as part of my normal process as a real estate investor. So it is Monday, November the 25th, 2019. These are properties that I literally pulled off of the MLS today, or that a real estate agent sent to me from the MLS, that are actually available for purchase today. These are the actual real conservative numbers that I use on these properties to calculate what my ROI is going to be. Now, I use conservative numbers because if I can make money using conservative numbers, I can sure make money using the actual numbers. So I want you to pay close attention because these are real properties, real numbers. And then you can see how I say you can easily get 50%. You can easily get 75%. A lot of these properties are actually getting well over 75%. I chose 6 different properties, but in order to keep the video short, I'm going to do 2 at a time. So this intro is going to be exactly the same for all 3 sets of properties, but we're going to do 2 properties for each video to keep it short. For this set of property evaluations, again, like the first part and like the next part, this is part 2. We're going to be looking at multifamilies. This is the bread and butter strategy in this particular market. 6-bedroom, 2-bath duplexes, 2 bedrooms on the first floor, 4 bedrooms on the second and third. This particular property, as you can see, just came on the market. There was snow on the ground in this market last week. That is what you're seeing there. That's not a snowstorm or anything else, just a little bit of snow. Actual conservative numbers. This is a conventional purchase with $5,000 down. That's correct. $5,000 was 20% down for this property. You can do the math and figure out how much that property is. Our minimum gross rents for this market, minimum gross rents in that particular area. I know we'll probably get more, but I'm basing it on the absolute minimum here because I have not seen enough pictures of this property. I've seen enough to know that it's solid, it's ready to go, but I have not seen enough of anything else to know that we're going to get more. I'm sure we will. I'll send my property manager over there and they'll let me know. Mortgage is $102 at 5% interest. Property management, we're going to put it $120. Taxes and insurance, high on both of those, but that's fine. The money we have left over, we're going to put into our maintenance. Maintenance, $150. Maintenance is going to be easily less than $150 a month. Some months will pay more, but other months will pay nothing. So $150 is good. We should have money left over at the end of every single year. We're going to put that into a maintenance contingency fund. We're not going to spend it. We're going to keep it for our future maintenance needs. Vacancy factor, 72% based upon a 6% vacancy factor for this market. Gives us a total of $556 in monthly cash flow for $6,672 a year passive cash flow, our money working for us. That is a 133.4% annual return on investment. Again, 133.4%. When I tell you that there are markets that pay 50% and better, I am on the low end. When I tell you there are markets that are 75% and better, this is one of them. I have investors tell me all the time that there's no way that I'm getting these types of numbers. I am here to tell you that I get these numbers all day long. These are actual properties on the MLS today. These came from a real estate agent today. These are actual real properties. So if you are not seeing these types of returns on your investments, you need to consider joining us for one of our real estate buyers events where we go to this market and other markets just like it. Second property for this evaluation, again, 6-bedroom, 2-bath. You can see that full-size attic where these additional 2 bedrooms are going to be. $9,000. This is a slightly more expensive property. $9,000 was our actual down payment on a conventional loan, giving us $177 a month for our mortgage at 5%. I know because this is a larger property and this is also in a slightly nicer part of town that our minimum rents are going to be $1,500 a month. Again, I know we'll probably get more, but I'm going to calculate my numbers on $1,500 because using conservative numbers, I'm still getting amazing cash flows. If it turns out I only have $1,500 a month in gross rents, then I'm still good with the return I am getting on this property. If it turns out I'm getting more for my rents, then that's even better. That's gravy. $150 for management, that's 10% of the gross rents. $100 for insurance, $100 for taxes, again, both high, but even if I paid $100 for both, I'm still cash flowing on this property. This is still a huge annual ROI. 90% vacancy factor, $733 a month for my cash flow. $8,769 a year cash flow. That's a 97.7% return on my $9,000 investment. And that's every single year. I'm getting 97.7%. If you're not seeing those types of numbers from your investing, go to our website and sign up for our next real estate buyers event. There is no reason to be accepting 10%, 20%, 30%. I hear people bragging about those percentages that they're getting. I hear people falling on the ground when they hear that somebody's getting 40%. That is not acceptable. Absolutely not acceptable. If you want to hear more about our buyers event where we're going to hold your hand, we're going to show you everything you need to do, and we're going to make sure that if you came ready with your checkbook, that you're going to get a performing property or as many as you want while you are at this event. Check us out, kevinmillsnow.com. That is for our real estate buyers events. millsuniversity.org. That is our online real estate investing courses. Follow us on Facebook. See more of these videos on YouTube. Also follow us on Instagram and Twitter for updates and what's going on. Again, jump on kevinmillsnow.com. Sign up for real estate buyers events. These events fill up fast. We are literally booked up right now 3 or 4 months, literally, to where we do not have a seat for the next 3 to 4 months. We are considering adding a couple, but that may not happen. So get on the internet now. If you can find a seat at a buyer's event, grab it. If you can't, then sign up for updates so that when we add another event, you'll know and you can get involved in that. Whatever you do, I wish you happy investing in all of your ventures. Don't procrastinate. Don't put it off. If you're sitting on the fence, now is the time to get off your butt and get this done.